everyone can make money in the up market when the markets get pick will fly,
Yeah,
right?
yeah.
But really down market are the people who had the track record, know how to do it, will do it better. Hey T, happy Tuesday.
Hi, happy Tuesday, Lynn.
We've been getting lots of calls from investors. How's the market doing? Are there any distressed deals? I think it's a good idea to tell people
Absolutely.
what the market day is and give people a real market update.
Yeah, so the big topic of the day is distress, right? We've been fielding a lot of phone calls on distress. What's distressed in the market today? Is Austin in distress? What aspects of Austin are in distress, right?
Actually, investors love to hear the word distress. It gets them excited, but they're also nervous.
Yes.
You like distress, but the really distressed situation comes, you say how to handle that. Are there distressed deals in the market? Where are we with the distressed market?
Right. I think we're seeing in our portfolio right now, all the calls coming in, for the most part, I'd say 4 out of 5 calls are distressed today, right? In some way, shape, or form. Right. Either the asset is underperforming or the capital stack is broken or the sponsor itself, the owner of the deal itself is in distress. So there's various entry points that we're seeing in terms of deal flow for Real International.
Right. So we'll show you this chart. In this chart, you can see this is broken down by year, right? You see the first year started 2023. And you can see the huge spike of distressed commercial loan. Then you see 24, 25, 26, 27. They're about 400 to $500 billion loan are distressed situation we're in.
And it's highly concentrated in office and retail, which have some certain fundamental concerns. Now, retail is doing far better than office, but we are seeing some very specific changes in the way real estate is being used, right?
Why don't you talk about multifamily? What do you see out there?
Yeah,
What kind of distress situation?
Multifamily has been a very interesting topic lately. There was a huge run up through 2021, 2022. Rents were skyrocketing after the pandemic, and everybody thought, values were going to the moon. We've clearly seen since the Fed started increasing rates by, call it 400 to 500 basis points, 4 to 5%, we've seen that completely reverse. Valuations are down, call it 10, 15, 20% in many cases for assets. Many assets that have taken short-term bridge loans, meaning 3-year loans with floating rate debt at SOFR, are now resetting. And now you see capital calls every few weeks to months. You're seeing capital calls for people needing to just fund their debt service ongoing. From a capital markets perspective is trending very weakly. And everybody's looking at the Fed saying, when's the Fed going to reduce rates? But that doesn't solve the problem in the long run. For the last 15 years, we've had free money. We don't have free money anymore, and we won't have free money going forward, right? So that's a reality.
Huge opportunity.
Huge opportunity for us because of the dislocation in valuations, the breaking in the capital stack, where sometimes real estate is not even worth the debt.
Right. Office market also, right? Of course, lots of office opportunity too, but also huge risk. You want to get into the right market. We were reading a report. There's only 10% of office building perform extremely well, but only 10%.
Yeah.
New York, I think Austin is somewhere in the middle. So we'll be really careful what type of office investment, distress that we want to even take on.
Absolutely.
Yeah.
And I was recently listening to an article in Bloomberg by a gentleman, Howard Marks, right, the CEO or the chairman of Oaktree. And somebody was questioning him about office buildings in New York trading, one building recently traded for 30 cents on the dollar. Wow. And the person was like, isn't that a great deal? And Howard's question was, how do you know whether or not that was a great deal?
Exactly.
You have no idea,
Exactly.
right? Because the fundamentals are...
Yeah. For office, there is a bright side, which is the suburb. That's what we're doing with several of our projects, right? Our Crystal Fall, we're looking at one distressed deal actually right now. We're underwriting in suburb Austin because people don't go to downtown, right? The high rises, people work from home, but they want to get to the office closer to their home. So the suburb, smaller boutique office building, office actually doing really, really well. So there's an opportunity.
Almost like value add office, right?
Yeah.
Smaller, more affordable, piecemeal. You can, on their personal budgets, right? They can afford that space.
Exactly. For land development, we also see a lot of opportunity because people tended to hold for long term, recession proof. But the problem is some people acquire the land with a loan, with a mortgage, so they feel the stress now. And also people like land development, it tended to last much longer. It would take years to go through the zoning, entitlement, and all that. So this is the perfect time, really sit back, spend time to look through all the portfolio. We have a 12 land holding in our portfolio. So we take our time to develop this, adding value to it. So when the market is really recovering, just in time to do the vertical or horizontal vertical.
Right.
So we talk about where the market is at, and we can see the chart that started distressing last year. We're in the middle of the 2024. What do we see? 3 years ahead?
Yeah, maybe for the next 3 years, right? We're particularly going to see a lot of distress now under the carpet, right? And then that's going to turn into opportunistic buying for the next 3 to 4 years.
What kind of distress investing strategy will fit into what we offer to our investors?
Yeah, I think fundamentally we are value investors, right? We want to buy below intrinsic value. So these are the kind of deals we're looking at. Essentially, when there's a broken capital stack, we're going back down to the core value of the asset and looking for the discount. I love what you said about waiting for the third phone call in a lot of cases, right? Then there's a motivated seller with an asset that needs to transact at a real price. And that's when we step in.
Let's talk about the 3 phone calls. Okay, so I give a Chia scenario. My phone will ring the first time. People will say, I got a great deal. Shovel ready, good deal, a good market. Well, if that's a good deal, why don't you do it? Waiting for the right partner. The first deal, hang up. The second deal come in, right? Well, we got a good deal, but we got a problem. And this is what we can do, right? Sit down, we go over this. The numbers seem so good, but not quite, right? Because there are tons of similar deals out there. People just needed someone. When music stopped, someone just standing there and waiting for someone to take on the project. I don't want to be the person. When music stopped, I took over that chair, right? You know what, Chi? We just need to do the deal. We really want to do. That's what we can do. So wait for this.
And that's where we come in.
That's where we come in. Why we're the best partner? People ask, hey, what do you do the best? I started my real estate career in 2000, which is a great recession. Actually, my investment just took off from there because we invest in the down market. For the next time, maybe we tell people what portfolio would perform better, right?
As we've grown as a company, with their clients at the center, we're really focusing on giving you a series of opportunities that allow you through every stage of your life to enhance your wealth and ultimately enhance your time and your freedom. So this is sort of, we flow with the market. So now we're in a distressed market, and therefore distressed opportunities are the best vehicle today to grow your wealth. Then we will be, as the market starts to recover, we'll go back to a momentum play and start looking for opportunistic deals, and then move into value, and then harvest again one more time in the future. So we believe that we've got, from a resources perspective, we're vertically integrated, we're boots on the ground, we've got every service that is needed to create the appropriate portfolio for you and for your goals going forward. So that's what we bring to the table, and that's why we believe we're a great partner in that regard.
Right. Looking back this year, we already started investing in some of the distress situation. I used to get a third phone call, not every day, but at least every week. So once we get the phone call, join us and help you with that.
And we're very selective right now, despite all those phone calls, right?
Exactly.
There's a lot of underwriting, a lot of screening, a lot of asset management and diligence that goes into every single deal. And so I think that's where we can be a good partner, right? We bring all of that cadre of expertise, experience to the table to effectively support you as you go through your stages in life and you grow your wealth.
Yeah. And also wanted to say lots of people in this situation got nervous. Like I mentioned, they don't know how to invest in the distressed market. Everyone can make money in the up market when the markets get pick or fly, right? Really down market are the people who had the track record, know how to do it, will do it better.
Absolutely.
Okay. Well, so call us. Happy investing.
Thank you.